Hello everyone, this is Yanko speaking. Thank you for joining me today. I hope you can all hear me. Um, it's been a crazy morning. I don't know what happened at 10 a.m., but the euro dollar and other currency pairs jumped around 50 pips in 1 minute. Um, I don't know if it's the banks or some other trading robots or trading automatic systems that make these crazy moves, but you know what? Instead of talking, let's just see it because I think it's a manipulation of some sort, and I'll tell you why. Let's just open the chart. Okay, so again, a quick market review before I talk about today's trading strategy. As always, if you have any remarks or questions, please feel free to ask at any time. Let's look here at the 15-minute chart for a second here at the euro dollar. I don't know if any of you is currently in any with any open positions on this currency or other currency pairs. But look what happened here. I've been watching it, and I have open positions, obviously, and I've been tracking this and other currency pairs, the Aussie dollar and the pound yen and the pound dollar, and you know, I saw the dollar, the euro dollar, as it went down and closed below this ascending trend line. Okay, just a normal move, and the euro dollar is in a general downtrend. So obviously, I thought, here we go, another day of the euro going down, maybe all the way down to 120, and even on the hourly chart, you can see that this candle here of 9 a.m., 9 to 10 a.m., closed below this this trend line. And I don't know what happened, but just when just when the new candle opened, you see here that it found support around this area. Okay, that's not surprising either. Okay, so it has support, and it gave a small, reversal candle, and even maybe a divergence. See here, this bottom and this bottom here. But if the euro dollar had continued going down, this divergence would have disappeared. Okay, the thing is that around 10, I don't know, 10:00 and 30 seconds or 20 seconds, it gave this 50 pip candle, almost 50 pip candle in 1 minute. Okay, it's almost a 1 minute candle here, 44 pips in 1 minute. And I'm telling you, I was in front of the charts. It was even 10 seconds, not even a minute. And I just before that, I closed a trade on the Aussie dollar and on the pound dollar and the pound yen, and I had a stop loss, a break-even stop loss on the euro dollar, because it's a sensitive area. But I couldn't imagine that the euro dollar would go up 50 pips, and it went up so fast that even though I had my stop loss on break-even, the trade eventually closed with a small loss of about, there was a slippage of about a pip and a half, because I'm trading on a platform which is market execution, ECN, and not fixed. So, it happens, and it's okay. I prefer losing, I don't know, a pip and a half than 50 pips or whatever. So just be aware of these manipulations, okay? And if you open a trade and you have a feeling that something is wrong, or you see hesitation, just even move your stop loss to break even, or wait for a while. If you, for example, I wanted to go short here, okay, I had a short position a bit higher. I wanted to scale in and enter another short positions, but I waited, okay, because I saw this support area, and actually I waited also because I already had a position, okay. Otherwise, I would have seriously considered entering into a position around here, but I wanted to wait to see if the candle closes, the hourly candle closes above the trend line. And I saw this move just before the end of the hour, okay, that's 9:55, I saw this move all of a sudden, and I said, okay, maybe it's going to close above the line eventually. It didn't, but at 10 a.m. it shot through, okay, and jumped immediately. So eventually I didn't enter long. I didn't enter short, and just had my other short trade close in break even. On the pound dollar, by the way, let me show you why I closed my position. Okay, I had a position which I was tracking on the pound dollar. It was somewhere around here. Okay, don't ask me why, but it was around here, and it went up and down and up, down and up and down, and I thought that maybe the pound dollar eventually is going to break down. But when I saw that this morning that the pound dollar went down, and again just around here, okay, this is the candle of 9. It closed here, and I saw that it closes again on the same support level. I said, okay, enough is enough. I don't know what's going on. Maybe it's going to break down, but I rather wait and see instead of stay in this uncertainty zone or this zone. And I closed exactly at 10. Just when this candle closed, I closed the trade. And I'm telling you, a few seconds later, it shot up about 40 pips here. Yeah, 45 pips. So I closed a trade here with a very small loss. Small profit. And the pound yen also. I had the pound yen and the Aussie dollar too. I had a short position around. I had a short position up and down. By the way, the Aussie dollar made a beautiful move tonight. I didn't witness it because I was asleep. But you see here this trend line and how this. I had this area marked here on my chart, and you see how the Aussie dollar reacted to this simple trend line, just like I told you yesterday and the day before. And every time, simple trend lines sometimes do the work. And look, beautiful move, 70 pips just from one trend line. Okay, it started around 4 a.m. At least on the charts here. So for those of you who are asleep during these hours, or maybe you can't take it, but still look at this beautiful move, and it has previous. You can see here also areas of previous support and resistance around the same area. Okay, support, resistance, breached, whatever. So there's strong support around here, and indeed it shot up around 70 pips. So that's a nice move up. And so I had a position also on the pound dollar, on the Aussie dollar, and I closed it when I saw that it went down here and it stopped. And I said, why is it stopping here all of a sudden? I mean, I expected it to go even further down. Okay, but for some reason, it stopped because it had this whole support area, and actually it looks like a reverse head and shoulders, okay, on the 15-minute chart. So it stopped here, it went down, it went up again a little bit, it went down. I was wondering whether it's going to break it or not. And when I saw that it found support here, I said, okay, maybe a double bottom, maybe there is some strong support here. At 9:57, I closed the trade here. And you see, so sometimes you need to be aware of these, of these small signals or small hints from the market that something is stopping, that something may be going wrong. And again, obviously I didn't expect this move, and I didn't enter long. I'm not saying that I entered long here because I obviously didn't enter long, expect this move, but I closed my short trades with small profits because I didn't want to take because I just wasn't sure what's going on with the market here. Okay, same thing with the pound yen. That's it. So just be aware of areas of price action, and again, 50 pips per minute in 1 minute is not something you can expect, but if you see that the market is holding, hesitating, just move your stop losses or take small profits or even small losses and wait outside to see where the market is going. Okay, the same thing with the pound dollar, the pound yen. It's been moving up and down and up and down, and my trade here around here was losing, and it was in loss and profit and loss and profit. Eventually, I decided again at 9.57 when I closed the pound dollar. I also decided to close the pound yen. I saw it reach this support here, and that's it. And a few minutes later, it shot up. So this is what I wanted to show you. It's a crazy market, and that's why I keep saying risk management and sometimes intuition and watching the charts and being aware of these small nuances of, you know, hesitation and, you know, something that is holding the market from advancing, especially when you expect it, okay? And obviously when, you know, before the non-farm payrolls, the market is going sideways, that's natural. But here, there was no, I didn't see any special reason why the market is trending, or is hesitating so much, okay? It broke previous lows, and I didn't see any special, well, here maybe there was the 76.4, I don't know. Not even, you see, it's just somewhere in the middle of nowhere. And so I was, you know, I was aware of that, and I decided to just hold and see. By the way, you can see that on the longer move, it's the 76.4 here, okay? But again, maybe it's a coincidence because here it didn't react to the 76.4 so much. So why would it react here? I don't know. Maybe it's just a coincidence. But again, I was aware of that as I was analyzing my charts on the daily levels. It's important, even if you trade on the 15-minute charts, just be aware of these areas on the daily charts or the 4-hour charts, and that's it. So maybe it's a coincidence, maybe not, but you can see that even on this long move, somehow there's reaction around the 50 and the 76, and obviously here on the 38. So this is it regarding some of my trading experiences for this morning. Okay, and indeed, you see, it looks like a very nice reverse head and shoulders, maybe with a sideways, with a diagonal or whatever neckline. Okay, maybe. If you want to know where the market might continue, okay, on the euro dollar, for example, where is the euro dollar? Okay, on the euro dollar, so, you know, there's still this gap that it has almost been closed, but not quite, okay? So the first resistance is around here, obviously. You know what, I'll even put it like this. Okay, somewhere around here. This is the first resistance zone. It's been a strong resistance zone before, around 121.50. After that, around 121.60, and maybe even 122.20, some say. Okay, around this area you see here, 22.20. If we take this trend line, maybe, you know, it can try to reach all the way up to this trend line, and I don't know, maybe it can move up and down, and maybe it can stop somewhere here, especially if we look at the Fibonacci levels. Maybe, you know, maybe it'll arrive here at the 76.4 and stop around here, 122.50, more or less. Okay, so we have tons of resistances along the way, but maybe, you know, maybe it's the beginning of some corrective move of some sort. Who knows? Okay, so that's the first. These are the first targets, right, around this area and this area. And if we look further up, if in case the euro dollar does decide to start moving higher for some reason, then we look for. So you see that around here, that's the 38.2. Here, that's a very nice resistance area. Previous support, and it's on the 50. And again, you can see that around the 38.2 there's a strong resistance. Around the 50 there's strong resistance from previous support. 61 has some support. So we have plenty of and yeah, I think the 61.8 is the strongest here, and it's around the 124. Okay, all around this area. Okay, maybe even lower. I don't know if it'll, but here, this is a very strong resistance and support after that, support and after that resistance. So just be aware of these zones in case the euro dollar does decide somehow to go 300 pips in the next couple of days or so. Who knows? Maybe the Fed or in Europe or whomever will decide to announce any quantitative ease or whatever, or stock buying, purchasing, or whatever. Okay, let's talk about today's trading strategy. It's called the Genesis, or some of you may have received an email from your just a sec. Yeah, what I should do here, I should remove all these. Let me just for a sec remove all these previous symbols. Okay, and I'll save it again. Okay, the Genesis. Okay, so some of you may have received an email from your account manager. It's, I don't know, they called it there the Genius Modigliani or whatever. It doesn't matter. You can call it the Genius or the Genesis. The idea here is to look for, obviously, lining up of the arrows and this Genesis indicator. We'll talk about it, and the stochastic. And we see here also the pivot lines and the Heikin-Ashi candles. So let's talk a little bit about all these and see how they all line up together. Okay, so basically we have here moving average, one moving average. It's the 5 exponential moving average. A typical price, it doesn't matter if it's the typical or the close, it's more or less the same. Okay, this moving average comes along with the Heikin-Ashi, okay, so that we can see where the Heikin-Ashi candles that you're all familiar with, where the Heikin-Ashi candles go below the moving average for short signals, or above the moving average for long signals. Okay. The arrows are an indicator. That's a separate indicator, and okay, the arrow indicator. Obviously, those of you who want all these indicators and the template, just send me an email. As always, I always try to reply as soon as possible. I think you've all been answered to my to your emails so far. So yanko.fx@gmail.com. Once you have the Heikin-Ashi and the moving average and the arrows start giving us signals, as you can see, according to the crossing of the Heikin-Ashi and the moving average, more or less. Okay, it's not exactly the crossing. Sometimes it can be a little bit later, but they more or less come together, and you see that the yellow lines, the yellow arrows, show up when the Heikin-Ashi candles are white and above the moving average. The purple arrows show down when the red Heikin-Ashi candles are below the moving average, more or less. Okay. These arrows are for you are the first signal. Okay, you may, if you want, you can even start trading before seeing these arrows, but usually these arrows will give you the first signal for direction, and then you look for the other indicators to line up, and I'll explain immediately. This trading strategy is basically for scalping, so you can trade it on the even on the 5-minute chart. Okay, when it's the 5-minute chart, the moves are shorter and you have more false signals. Okay, so be aware of that. If you want to filter them out, I suggest that you trade the 15-minute chart instead of the 5-minute chart. Okay, so you have the arrows, you have the Heikin Ashi, and you have the moving average. And then when you see that these indicators start giving you direction, you look for confirmation from both indicators, the genesis and let's just stretch it a little bit. Okay, the genesis you can see here, and the stochastic. In this case, the stochastic is 1133. Okay, usually I use the default 533. Here it's the 1133, and you can see other. You can use maybe 833 or 333. Depends on how you feel comfortable with this indicator with stochastic. But for this template, the stochastic is 1133, and I guess it's because you trade the very short time frames, like 5 or 15 minutes, and you don't want the stochastic to be too volatile. Okay. So let's talk about these two. How do we use them? So obviously the genesis reminds us of other multi-time frame indicators we saw, that when we want to see everything in red for short or everything in white for long. But this indicator is not a multi-time frame indicator. It's just I would say oscillator indicator. Okay, it has several indicators here. If you want to see their properties, just look at the indicators list and then edit the indicator. Okay, so you can see here the time frame is according to the chart. Okay, it's 0, and you have here different indicators, the TVI, the CCI, the T3. I guess these are all custom indicators. Since well, I didn't look at the code, but it doesn't really matter. What matters is that that if you want to play, what you see here, the bar count, it looks these indicators are set to look such and such candles to the left. Okay, in the history, in order to determine their color, their trend. Okay, we have here the GAN. The GAN high-low indicator. Okay, and you can also set the alerts if you want an alert pop-up or an alert email, or if you want an alert when the bar closes, you can set them here. Okay, the thing is obviously that it doesn't really matter, because I didn't, I'm just using this indicator. We're showing it to you with the default settings, and that's good enough. You can try to change them, but I guess the default settings are the best as far as the developer found them to be for this strategy. You can see that when the trend is generally a downtrend, okay, the red indicators, for example, here, okay, you see here obviously more red than white. Okay, the red indicators are more consistent, whereas the white indicators change more often. Okay, so be aware of the general trend. If you know that the general trend is a downtrend, okay, don't be aware of, even when you have a long signal. Okay, even when you have a long signal here, and you have all the indicators in white. Be aware and don't be too indifferent, or don't disregard the general trend. Okay, you may take long signals here, especially if it's just for scalping, but it may change rapidly. And I remind you with the Heikin Ashi candles, when you see that the bodies become smaller and you have long wicks with some resistance, and then obviously when you have a reversal, changing of color, just close the trade. Don't hesitate, and don't think that it's going to continue. You see things change rapidly, especially in the shorter time frames. Remember that if we see the arrow here, okay, let's say we see the arrow here, or even the candle here, and it's above the yellow moving average, and we have all these line up in white, okay, even if you decide to enter here, the entry is only around here, because it's the Heikin Ashi, so it's closing. The close is only around here, so there isn't much here to take. Okay, well, eventually, I mean, we couldn't have known that before, but you see that. I'm just saying that if it looks like there's a big move here, it's not such a big move. Okay, the Heikin Ashi candles look long, but if you enter at the close of the candle, it's only around here, and then it doesn't leave you much. Okay, just be aware of that. So we want the genesis to line up, okay, with all the indicators, and what we also want is for the stochastic to go out of an overbought zone for short or an oversold zone for long. This gives you even a stronger move, or a stronger indication, okay? So for example here, that's a very nice area where the stochastic was in an overbought zone, okay, above 80 more or less. And then we have red Heikin Ashi candles closed below the moving average. We have an arrow. It comes only later, okay, but if either you decide to wait for the arrow or you decide to enter before the arrow, okay, when you see the Heikin Ashi and you see that the stochastic went out of the overbought zone, and you see already all the genesis indicators line up in red, okay? So in either case, if you enter here or here, it doesn't matter too much, but you take a very nice move, a very nice down move, okay? On the other hand, here, when we saw this long signal from all indicators, the stochastic didn't really come out of an overbought zone, but it did, and that's the other indication. Okay, you either wait for an overbought zone or for some divergence. Okay, so it gave us a slight divergence, not very strong, but you see here that these lows are going lower while the stochastic is going a little bit higher. So it can be a nice signal for long, and if you do decide to take this candle for long, okay, you take whatever you take, even 10 pips for scalpers. That's a nice move. Even if you don't take, even if you exit it here, maybe you exit in break even or a very small loss. That's fine. Okay, so be aware of divergences, be aware of overbought and oversold zones. Wow, something happened here with the pound dollar. I'm just something crazy. I don't know what happened here to the pound dollar, but it all of a sudden shut down, dropped. I'm telling you, this market, 70 pips in 1 minute. What happened here? Just a sec. I need to see that. Okay, this is, I'm just, you know, I have other charts open here on a different screen just to monitor them, and it's really crazy. Okay, anyways, so just be aware of the divergences, be aware of, sorry, I'm, you know, this market really sometimes amazes me, the way it behaves and the way things move so rapidly. Thank God I'm not in the pound right now. Okay, let's see a few more examples here of the lining up of indicators and where to see the exit of the stochastic from oversold or overbought zones. Okay, so for example here, okay, you can see an area of tops. Okay, 3 tops or a full top. Okay, you have this candle here. you see the stochastic almost came out of the overbought zone. It was very close to there, but eventually, it just touched it and went down. It's still a nice indication. So you have here double top here. You have the purple candle, the purple arrow, sorry, and the candle, and it goes below moving average. It's around midnight, so I guess I wouldn't trade it anyway on the euro dollar. But if it were in the middle of the day, that could have been a nice example for a small short position to take for scalping. On the other hand, okay, you can see here this long signal, okay, that doesn't come. It comes with all, with the white Heiken Ash candles and with the yellow arrow, and all of these are white. But the stochastic didn't come out of any overbought zone or any divergence. Those of you who are more strict and want to see only overbought and oversold zones or only divergences, this trade is or this signal is not a valid signal to trade. Okay, this is not a valid signal, but it's you see it gave about 20-25 pips, but it doesn't say that it doesn't say that it's according to the rules. Okay, if you stick to the rules, you have to wait for the stochastic to also give you an overbought or an oversold zone, as the case here. One more thing I want you to pay attention to is the Genesis indicator with regards to the order or the formation of these squares. Okay, when you see, for example, here that all the indicators form or turn red more or less at the same area. Okay, they start, they change from white to red more or less the same candle. One candle may be apart, but all form together. Or for example here, they all formed to white. Okay, they all changed to white together. Here and here too. Okay, here they all formed or all changed to red together. When you see this, it's a stronger signal for you because it means that all indicators show reversal. Okay. On the other hand, here, for example, the signal for long came somewhere in the middle, and you see the shape or the change from red to white wasn't all lined up. It was, sporadic in a way. Okay, this means it's a weaker signal. It doesn't mean that the move here is not valid. Of course, it's a valid move. It's a great 25 pips, but still, it means that or it's some, in a way, it's a bit of a weakness sign. Okay, sort of. No, I don't know if weakness, but it's less strong than other places where all indicators line up or change from red to white or from white to red at the same time. Okay, so this is what I wanted to show you with regards to the order here, and let's see a few more examples. For example, here, beautiful. Okay, let's look at this beautiful move, how they all change together. Okay, whereas here they're all in red, but they didn't change together, and you see that's not really any strong trend or any good move. Okay, or for example, let's see a few more examples. Okay, here they all changed together. It didn't go much. It's the middle of the night. It's still 20-something pips. I wouldn't trade it anyway in the middle of the night. Here, there's a nice move, although not much. 20-something pips again. Here you can see again, it didn't change at the same time. Okay, there is a sporadic change or not in line, and you can see that the short move around here wasn't a good move. Okay, so be aware of it. Okay, just wait and look for the Genesis indicator, to move or change all at once, or maybe one candle apart, okay? But more or less more at once here. It didn't change. Well, it's almost, but not a very good one, although the move here is quite good, okay? But if you really want to take good moves, the best areas to look for are the areas where they change all at once, okay? Again, give or take one candle. So this is a very nice move downwards. Okay, there is no arrow here. Actually, there are no arrows anywhere here. Maybe they're already deleted, or maybe I deleted them before. But you know what? Let's. Where is it? July 17th. Let's just change it for a sec. No, it didn't. I guess the arrows here go only about 10 days back, or 2 weeks backwards. So the indicator doesn't take into account all the history. But still, even if there is an indicator, an arrow here, and even if not, you can see this nice move, red Heikin Ashi candles. You can always wait for the Heikin Ashi candles break below the trend line if you're more hesitant, okay, to break below and then take the trend. But you can see even here, they all line up together. The stochastic went below an overbought zone. Okay, here the overbought zone, it went below it. We have a double top here. That's also a good area to go short. Okay, and eventually it dropped. Okay, I showed you the 15-minute chart. Again, the indicator is basically for the 5-minute chart, or the system also talks about the 5-minute charts, but I don't like the 5-minute charts so much. Sometimes it's okay, but it's very choppy. It's very, I would say, very confusing and crazy. The 15-minute chart, as you can see, gives you nice signals and very nice moves. Okay, so maybe again, it's up to you. You can always try to trade the longer time frames. Okay, they will give you obviously even longer moves, but for example, you can see here that although a short move started here, it went up and down and only then continued. So if you don't have much patience, or if you don't want to wait for very long moves, unlike yesterday where we saw the other trading strategy on the daily charts, okay, if you don't want to wait for these moves, then just take the 15-minute chart and trade these signals. I think it's if you have patience and you wait for these lining ups, okay, for these when all indicators are in accordance and line up together, and especially change at the same time. And you can always try to add other indicators too. Okay, you can always I don't know, if you really want to, you can add the multi-time frame or other indicators. If you trade the 15-minute chart with these, they can give you some very nice signals. Okay, let's look at the no, I think it's here. Where is it? The 4 time frame. Yeah, let's look at it here and see the correlation between these. So you can see that the multi-time frame is completely different. Okay, because it looks at different time frames, not at different indicators. Okay, so for example, around here we have some long signals, whereas the multiple time frame is still in red. Okay, especially the 4 hours, which is the long time frame, it's still in red. On the other hand, if you do have all indicators line up more or less around here, it gives you a better confirmation of the trend, and you can read the trend longer. But of course, if you have signals from the Genesis indicator and the other indicators like the multi-time frame gives you false or contradicting signals, for example here, okay, let's say you want to enter short here, but the multi-time frame gives you blue on the shorter time frames, that may prevent you or hold you from entering short, and you may miss some trades. But it's up to you. If you're very solid, if you want, everything to line up together, and you want everything to be in accordance, and you want to be very sure, super sure in your trade, you can always add these or add other indicators. It's up to you. The more filters you have, the fewer trades you have, but perhaps the safer trades you have and more profitable. Okay, so it's really up to you. And you can see here, well, that's the middle of the night, that's why the moves here are not very long. Let's look at here, for example. That's a nice move. Okay, everything is blue, everything here is white, and the stochastic went out from the overbought zone. You take the trade around here maybe, okay, and it's about 40 pips with not much effort, and all indicators altogether give you a very nice confirmation. Okay. Here, for example, a nice short move. Okay, all indicators are short. The stochastic went out of overbought zone before, okay, earlier. So maybe it's valid, maybe it's not. It's up to you to decide. Again, test the system and see how much the stochastic is helping you. But you see here another nice move, and I remind you, it's only the 15-minute chart for scalping. We don't see the arrows here, but I'm sure the arrows can also help with confirmation or with some predictive indication. Okay, that's it basically with regarding the Genesis trading system. It's a nice system. You know what? You can try to, even without using the Heikin Ashi, just put it on your charts with whatever setups you have, and see how it helps you. Okay. It gives us several indicators, not multiple time frames, but multiple indicators. And I remind you, the strength of this indicator is when they all line up together at the same time. Okay, that's a strong signal. That's a strong signal. Here, it's not very strong. Okay, here it's also quite strong. Okay, one candle apart more or less. Here, it's not strong. It doesn't mean it can't give you a nice move, but again, if you look only for strong signals, wait for it to line up. Okay. Here, well, that's the middle of the night. Here, that's a nice signal. Also, it's quite early in the morning. Here, more or less, that's a nice signal. It didn't give much, though. That's a nice signal here. Again, it's maybe too late at night. Well, here, this is an example of a nice move that may have been missed. Okay, if we're waiting for all indicators or all oscillators here to line up together, this may have been missed. Okay, but still, okay, even if you miss something, it's better than taking it or taking something that is not sure and then losing. Okay, that's a nice signal here. That's a nice signal here. We already saw it. So just go backwards and look for these areas where they all line up together. Okay. Look at this beautiful move. Okay. Beautiful move. The stochastic comes out of the overbought zone. All indicators in the Genesis indicator line up in red. We have red Heikin Ashi candles below the moving average, and it's a beautiful, nice move. Okay, this is after, this is the non-farm payrolls. Okay, if you have any questions, please don't hesitate to ask, and feel free to ask. If not, let's just take a quick view of the market. The pound dollar is, well, I saw what happened. It's just the news on the pound. The GDP was lower than expected, much lower than expected. The GDP was expected to be minus 0.02%. and it came out minus 0.7 or 0.7%. That's very low. So the pound dollar shot down, or almost already, 80 pips. Unbelievable. I guess the euro pound is, yeah, you see. Okay, so that's the euro pound. You see, sometimes it takes these candles to close above resistances. Okay, strong resistance requires strong candles. Okay, so I guess that's the solution of the forex market. That's the answer of the forex market to these areas where you have a block, when you have such a strong resistance zone and not just a small line. You need a big candle. Okay, so big problems require big big measures, or big hammers. Anyway, so the euro pound, I guess, will it already started on this daily engulfing bullish candle. It started giving us a hint of a potential long move, and I guess it has a lot to retrace anyway. You see, you see the weekly chart, okay? But even if we take the daily chart and we go just to the recent high, you know what? Even here, not even. You see, that's a 340 pip move. Okay, so the first area is the 23.6. It's just around here. We're just around here. It's also previous support. I guess, well, you see the 38.2 has also some resistance. The 50 lines up with a resistance. The 61 lines up with a resistance or support. And the 76.4. I don't know how far it will go, but it did break or breach. It breached this trend line eventually. Okay, here it went down, and now it breached this trend line and the resistance area. Perhaps it remains to see how this candle will close eventually. So we have this at least, let's say, maybe 50 pips to the next Fibonacci level, 70 pips to the 80, almost 90 pips to the 50 zone. Who knows, maybe even 130 all the way up to the 61 area. Okay, but the euro pound does have a lot to retrace, and look at it, it's just unbelievable. If eventually, if the euro pound does start any corrective move, even the 38.2, okay, even to the 23.6, it's around 300 pips. Okay, who knows? I don't know if this is where it'll start, but you can see the monthly chart. Okay, I think there's also a 200 moving average here. Let me just see. No, not the the 200 is just below, but the 144. But you can see this very strong support line on the monthly chart. So we are expecting, I think, some major retracement. I don't know how major, I don't know how strong, I don't know how many pips, but some retracement. You see, from here it went up 2,000 pips, okay, during 2008. So obviously later on it shut down, but it went down. But some corrective move, you know what, even all the way just here. Just this move here gives about 350 pips or so, 300 pips. Just correcting this move all the way to the previous support line and previous resistance is about 300 pips, pound pips, okay, because it's the euro pound, so it's about, let's say, $450 pips, okay? Be aware of it. Maybe you can start looking for long opportunities on the euro pound. I don't know. There's also a nice divergence here on the daily chart. Okay, you can see that the stochastic here went up. So there's still a potential move up with corrective moves. Maybe not immediately, but be aware of it. Okay. That's it. All the rest didn't, all the rest remained more or less unaffected with the, okay, the dollar CAD. Yeah, all the rest remained pretty much unaffected. Okay, the euro dollar didn't move a bit while the pound dollar dropped. And that's it. Just before we finish, I remind you the dollar Swiss, we talked about it yesterday and the day before. The 200 moving average here, okay, 200 EMA on the weekly chart. I said I wonder if it would react, and so far it seems like this moving average may give some resistance eventually to the dollar Swiss. So who knows, maybe we will start seeing the euro dollar going up and the dollar Swiss going down, something. I don't know how much, but even if it's a corrective move only of the last the previous the recent long or uptrend, okay, even here, you know what, even here you can see that around the 38.2 there is some support, or the 50, okay, the 50 area is I think a favorable area if the dollar Swiss keeps going down, at least at the beginning, because it has previous resistance here. Now it may turn to support, and we see here potential divergence, okay, potential on the stochastic, okay. Yeah, there's a question here, where can you get the Genesis indicator? Again, I'll just write it here, my email yanko.fx@gmail.com. This is where you may find, you may get the indicator, or from me, I'll send it by email, or from your account manager. Okay, but you could just send me an email and I'll send you a pack with all the indicators and template and whatever. This is it. I don't know. We have almost 3 days until this week ends, Wednesday, Thursday, Friday. I wonder what will happen later on this week with the euro dollar, with the pound dollar, with with the S&P, whatever. All these, it's curious. I'm curious to see what holds next. So again, just please be disciplined, be patient, watch your trades, use stop losses. You see, you may be taking long here on the dollar, on the pound dollar, and in 1 second it drops 80 pips, and a winning trade turns to a losing trade. So maybe vice versa, I don't know. So just be cautious with your trades. You see, the market is crazy. That's it. And trade well, trade patiently, manage your risks, and I'll see you next week. By the way, we'll have only 2 webinars next week, on Monday and Tuesday, because on Wednesday I'm taking a vacation for a week. So next week we'll have 2 webinars, and the week after there won't be any webinars for 1 week. So that's it. Thank you very much for attending, and I'll see you on Monday. Good luck, have a good week, have a good day, and thank you very much. Goodbye.